Palantir has been one of the most talked about stocks this year, and as we head into a fresh trading week, it's time to break down exactly where things stand and what investors might expect next. Coming off a week where the stock climbed around 4% on Monday and another 4% in the after hours following its earnings report, the momentum seems undeniable. Yet with the excitement comes a growing chorus of caution, and in today's video we're going to unpack both sides, looking at the bull case, the bear case, and what might actually play out over the coming sessions. To start with, the market's response to Palantir's second quarter earnings was overwhelmingly positive. The company beat both revenue and earnings estimates and gave strong forward guidance, something Wall Street always loves. Revenue came in at $650 million, surpassing expectations, while adjusted earnings per share landed at 8 cents, also ahead of consensus. These are encouraging numbers, and what makes them even more meaningful is the consistency. This was Palantir's 7th straight quarter of GAAP profitability, a clear signal that the company has turned a corner from being a speculative AI play to a business generating real returns. But numbers are only half the story. What's really driving investor interest right now is Palantir's positioning in the artificial intelligence landscape. As more and more companies begin integrating AI into their operations, Palantir has positioned its AIP platform as a plug-and-play solution for enterprise clients. That's not just a marketing pitch, it's being reflected in adoption metrics and commercial momentum. U.S. commercial revenue is up 42% year-over-year. Customer count is growing. The government segment, which has long been the bread and butter for Palantir, remains strong and stable, but it's this explosion in commercial growth that's really capturing the market's attention. The company is also continuing to land major contracts. We're talking multi-million-dollar deals with sectors like defense, healthcare, and logistics. The U.S. Army, the Department of Defense, and NATO allies are all still major customers. But there's also growing adoption in less expected areas. Fast food chains, financial institutions, insurance. That's a sign that Palantir's technology is moving from niche to mainstream, and in the eyes of some investors, that alone justifies the stock's recent surge. That said, there are reasons to pump the brakes just a little. Even with all this good news, the valuation is starting to raise eyebrows. At Friday's close, Palantir was trading at around $177, putting its market cap north of $40 billion. And based on forward earnings projections, that gives it a price-to-earnings ratio approaching 290. That's not just high, it's stratospheric. Even the most generous growth multiples rarely get that kind of treatment. It means investors are pricing in a future where Palantir not only meets but exceeds current expectations for years to come. That kind of perfection is hard to deliver in any market environment. One of the more vocal critics recently has been short seller Andrew Left, known for his work with Citron Research. He's called Palantir one of the most overvalued names in the market right now and says it could fall sharply from here. His reasoning is fairly simple. He sees the company as a solid AI player, but not one deserving of a price-to-sales ratio of over 80. He argues that even with a government moat and some success in commercial sectors, the growth trajectory doesn't justify the kind of premium that Palantir is commanding. Still, markets don't run purely on valuation metrics. They also run on sentiment, momentum, and narrative, and right now, Palantir has all three working in its favor. Retail investors love the stock. Institutions are warming up to it. Analysts are mixed, but a few have recently upgraded their price targets following earnings. There's also a growing sense that Palantir could become a pillar in the broader AI ecosystem, not just as a software vendor, but as an enabler of enterprise transformation. As we look to the week ahead, there are a few key things to watch. First, price action. The stock has rallied hard over the last 2 months, but especially in the past week. It closed Friday just under $177, and in after-hours trading it pushed past $183 before settling back down. If the bulls can maintain momentum and push above that $183 level with strong volume, it could create a technical breakout and open the door to even higher prices. On the flip side, if selling pressure builds or the broader market weakens, we could see a retracement back to the $170 or even $165 levels. Second, pay attention to macroeconomic developments. Any news on interest rates, inflation data, or geopolitical developments could shift sentiment, particularly in the tech sector. High-growth names like Palantir are especially sensitive to changes in bond yields or economic expectations. So if the Fed signals a more hawkish tone or if inflation numbers come in hotter than expected, that could weigh on sentiment even for strong companies like Palantir. Third, watch for any analyst upgrades or downgrades. We're likely to see a wave of analyst activity in the coming days as firms digest the earnings report and reassess their models. If we see a few more bullish notes from the sell side, that could add fuel to the rally. Conversely, if major firms issue downgrades based on valuation concerns, that could be a short-term headwind. Lastly, keep an eye on the options market and short interest. Palantir has historically been a battleground stock, with high short interest and a very active retail base. That can lead to sharp moves in either direction. If shorts start covering or if call options get aggressively bought, we could see another leg higher purely based on market mechanics. Taking a step back, the big picture for Palantir remains intact. This is a company with real technology, real customers, and now, real earnings. It's no longer just a bet on the future, it's a company executing in the present. But with success comes scrutiny, and with higher share prices come higher expectations. Investors will need to weigh whether the current valuation makes sense in the context of future growth. For long-term believers, the bull case is pretty straightforward. Palantir is building a defensible moat in the AI space, combining deep government relationships with growing enterprise adoption. If management can keep executing, and if the AI boom continues, the company could eventually grow into its valuation. It might not happen overnight, but for those with a multi-year outlook, the upside potential remains attractive. On the other hand, those with a shorter time horizon or a lower risk appetite may want to be cautious. The stock has had a strong run, and it wouldn't be surprising to see a period of consolidation or even a modest pullback. That doesn't mean the story is broken, it just means that markets move in waves, and no stock goes up in a straight line forever. In closing, Palantir has once again captured the attention of the investing world. With a strong quarter behind it and a promising future ahead, the company finds itself at a critical juncture. The next week will be telling. Can the stock hold its gains? Will new buyers step in? Or will profit takers take control? It's a moment where momentum meets valuation, where optimism meets realism. And for investors on the sidelines, it's a chance to reassess whether this is just another hype cycle, or the early innings of something truly transformative. Let me know in the comments where you stand. Are you riding the wave with Palantir? Are you taking profits? Or are you still waiting for a better entry point? Either way, this is going to be one of the most fascinating stocks to watch this week, and probably for many weeks to come.